The following is an Investor Brand Network audio production via our audio press release solutions. As a multifaceted financial news and publishing company, Investor Brand Network utilizes its network of more than 5,000 distribution partners as well as other corporate communication tools to introduce public and private companies to a wide audience of investors, consumers, journalists, and the general public. Investor Brand Network's platform connects the investment community with companies that have great potential and a strong dedication to building shareholder value. The following audio press release may feature a client partner of Investor Brand Network. Investor Brand Network may have been compensated for the production of this audio production. Please be sure to read our entire disclaimer for full disclosure. Network Newswire presents LaFleur Minerals Inc, focused on becoming strong contender in gold mining space. Gold's meteoric rally, fueled by waning confidence in U.S. fiscal policy and soaring inflation, has not only pushed prices past the historic $3,300 per ounce marked in early 2025, but also opened the door to even more ambitious forecasts. Some analysts now predict a climb to $4,000 within the next 12 to 18 months. With this in mind, gold-focused equities and Canadian gold producers are gaining renewed attention for offering higher leverage to rising bullion prices within a stable jurisdiction known for quality deposits and operational reliability. Among these, LaFleur Minerals stands out with its fully permitted gold mill situated in Canada's most prolific gold-producing region, a combination that aligns perfectly with today's market demands, providing investors both near-term production potential and exposure to the upside of surging gold. LaFleur Minerals is laser-focused on positioning itself as a strong contender in a space known for quality gold mining operations, including Barrick Mining Corporation, Royal Gold, Nicola Mining, and ESGold Corp. Gold-focused stocks, particularly those tied to Canadian producers, are drawing fresh interest for their strong leverage to rising gold prices and their presence in a secure, resource-rich jurisdiction known for dependable operations. LaFleur Minerals is an emerging near-term producer strategically positioned in Quebec's prolific Abitibi Gold Belt, Canada's largest gold-producing region. The company is gaining attention in the junior gold space due to its Swanson Gold project, which hosts the advanced resource stage Swanson Gold deposit. LaFleur Minerals is on the cusp of transforming its operational footprint with a restart of the fully refurbished and permitted Beacon Gold Mill and producing gold at Canadian dollar costs. A dramatic rise. Driven by declining trust in U.S. fiscal policy and rising inflation, gold's rapid ascent has propelled prices up to $3,300 per ounce level as of early 2025, and many believe this is just the beginning. Projections now suggest gold could reach $4,000 soon. The dramatic rise from $2,500 to $3,000 in only 210 days, marking the fastest increase of its kind on record, highlights the strength and momentum behind the ongoing gold rally. Leading financial institutions are raising their gold prices projections, with Goldman Sachs forecasting a rise to $3,700 by the end of 2025 and reaching $4,000 by mid-2026. JP Morgan is also predicting gold will hit the 4,000 mark, attributing this expected increase to strong central bank demand, which is averaging approximately 710 tons in net purchases each quarter. With this in mind, gold-focused stocks, particularly those tied to Canadian producers, are drawing fresh interest for their strong leverage to rising gold prices and their presence in a secure, resource-rich jurisdiction known for dependable operations. Standing out among these producers is LaFleur Minerals, which owns the fully permitted and recently refurbished Beacon Gold Mill, located in Canada's most productive gold region and mining town. This strategic positioning offers investors a compelling mix of near-term production readiness and exposure to the continued upside of a bullish gold market. From explorer to producer. LaFleur Minerals is an emerging near-term producer strategically positioned in Quebec's prolific Abitibi Gold Belt. With 100% owned assets and a focus on near-term cash flow, LaFleur is advancing its flagship Swanson Gold Deposit, an advanced resource stage property with more than 36,000 meters of historical drilling and a strong development potential. In addition, a key component to LaFleur's near-term production strategy is its fully permitted and recently acquired Beacon Gold Mill. The mill is located just 50 kilometers from the Swanson project. Purchased in 2024, following approximately $20 million in upgrades by its previous owner, the Beacon Mill has its processing capacity of more than 750 tons per day and is being prepared for restart by the end of this year. The mill positions LaFleur to not only process its own ore from its Swanson Gold project, but also generate revenue through custom milling of nearby gold deposits, which the region is flush with. This vertical integration marks a significant shift for LaFleur from an explorer to a near-term gold producer in a Tier 1 mining jurisdiction with considerable upside potential. Drilling and permitting. LaFleur Minerals is quickly gaining attention in the junior gold space due to its Swanson Gold project. The Swanson deposit hosts an NI 43-101 compliant resource of 2.113 million tons at 1.8 gram per ton gold, containing 123,400 ounces in the indicated category, plus 872,000 tons at 2.3 gram per ton gold for 64,500 ounce in the inferred category. These figures represent an 8% increase in indicated ounces and a remarkable 626% increase in inferred ounces compared to past estimates, highlighting the property's compelling upsides. Looking ahead, LaFleur will launch a significant diamond drilling campaign in Q3 of 2025, comprising a minimum of 5,000 meters of diamond drilling at several promising gold targets at the Swanson Gold Project, with a goal to increase resources to more than 1 million ounces of gold. In parallel, LaFleur has commenced permitting for a substantial 100,000-ton surface bulk sample from the Swanson Gold Deposit, averaging an estimated grade of 1.89 gram per ton gold, which can be concentrated to higher grade for shipping and milling economics, equating to roughly 6,350 ounces, or about 3% of a current resource. With samples being processed at the nearby Beacon Mill, this initiative is aimed to generating early cash flow, delivering vital metallurgical data, and advancing the project's economic evaluation. Near-term gold production. LaFleur Minerals is on the cusp of transforming its operational footprint with the restart of the fully refurbished and permitted Beacon Gold Mill near Valour, Quebec. Purchased from Monarch Milling under Canada's CCAA process in late 2024, this strategically located processing plant differentiates LaFleur by allowing the company to process its own Swanson Gold Project material and deliver custom milling services to nearby deposits. The Beacon Mill is nestled within the Abitibi Gold Belt in Valour, Quebec, which hosts more than 100 historical and active mines in close proximity. The mill's location positions it perfectly for efficient ore transport, enabling LaFleur to fast-track bulk sample processing in full-scale ore milling, which is especially vital as the company advances toward bulk sample permitting and eventual mining at Swanson with intent to generate meaningful cash flow by year-end into 2026. Acquired through an arm's-length asset purchase agreement, the transaction was financed with 250,000 Canadian dollars in cash and 850,000 Canadian dollars in equity, with court approval received in October 2024. Monarch had suspended operations in September 2022 when gold traded in the 1,800 Canadian dollars per ounce range, maintaining the mill in care and maintenance after contributing 20 million Canadian dollars in restoration. The facility features a Merrill Crowe cyanidation circuit, a 27.5 by 69 meter processing building, extensive water and tailings basins, and robust electrics driven by a 4,000 kilovolt amperes transformer. In early 2025, LaFleur initiated a detailed restart program using ABF mines and environmental consultants to conduct site inspections, develop a parts inventory, and complete geotechnical and tailings storage facility assessments. The company plans to return the mill to full operation by early 2026. Restart costs are expected to be in the 5 to 6 million Canadian dollars range over a 6 to 8 month period, with an aim to begin processing mineralized content by the end of 2025 and generating initial annual production of up to 30,000 ounces. This path to production highlights the low-risk, low-restart cost factor and immense upside potential as the LaFleur pivots years ahead of other players in the region. The timing could not be better. With gold prices reaching $3,200 per ounce, the economics of near-term production are compelling. This asset gives LaFleur a competitive head start, potentially placing it at least 5 years ahead of peers still in exploration mode. The Beacon Mill metamorphoses LaFleur into a producer, offering a pathway to revenue, regional cooperation through custom milling agreements, and de-risked operational scaling. In addition to processing bulk sample material, the mill's capacity opens doors to third-party contracts. This potential stream of incremental revenue would not only improve cash flow, but also enhance relationships with nearby exploration companies and communities. From an investor's standpoint, the strategic value of Beacon seems clear. The facility offers economies of scale, redevelopment of an existing asset, and immediate scalability without the typical delays associated with permitting greenfield mill sites. It also complements the Swanson resource. The interconnection of project and mill resources, a vertically integrated model that enhances project economics and puts the company on a production trajectory in a Tier 1 jurisdiction. In addition, having a fully permitted Beacon Gold Mill offers LaFleur an amazing opportunity to expand the Beacon Gold Mill to higher capacity using cash flow from current gold production without having to go through permitting processes that any new mill would require, involving 3 to 5 years in permitting processes and costs. LaFleur's clear timeline, from asset closing in October 2024 to restart planning and permitting in Q1 to 2 of 2025, toward anticipated production in early 2026, reflects a highly structured execution strategy that positions the company as a potential near-term gold producer with robust upside. LaFleur's methodical approach aligns with its broader strategy: blend resource growth via systematic drilling with infrastructure-led delivery through an adjacent mill. Ongoing exploration, including airborne geophysics, IP surveys, and geochemical sampling, has also identified more than 50 new drill targets, laying groundwork for resource expansion. This integrated strategy positions LaFleur to make the key transitions from explorer to producer. By mid-2025, the company aims to process the Swanson bulk sample at Beacon and commence mill restart, generating initial revenue and funding further development. Once full-scale operations begin, production costs yield over 30,000 to 40,000 ounces per annum, given the mill's capacity. In today's gold market, which is marked by elevated prices and investor focus on low-risk jurisdictions, LaFleur stands out for its balance of scalability, infrastructure, and sustainability. Its dual promise of exploration, upside, and near-term value captured via bulk sampling and mill access makes it appealing to investors seeking exposure to a responsibly managed and strategically advanced gold project. This audio press release is an original broadcast provided by Investor Brand Network, a multifaceted financial news and publishing company that delivers a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and brand awareness tools. Investor Brand Network may receive payments for the services and solutions provided to its client partners. You should assume that the owners, officers, and directors of Investor Brand Network or financial analysts mentioned in this audio production may hold a position in and may intend to trade the securities on their own accounts. This audio production is not an offer or recommendation to buy or sell any securities mentioned in this audio production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries an investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This audio production by Investor Brand Network is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by Investor Brand Network as to completeness or accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.